Dear President Kaljulaid, honored guests and colleagues, close ties between Sweden and Estonia, being neighbors across the Baltic Sea, go back a long time. The good cooperation between our countries extends to different areas, but for today's purposes, we're mostly interested in the links between our economies and financial sectors. Sweden is the third largest export market for Estonia. We are selling to Sweden communication equipment, the volumes of which are driven by Estonian operations of the Swedish Ericsson, but also prefabricated buildings and a wide variety of other products. The most sizable product category in our imports from Sweden are cars and trucks that account for a third of the total. So I suppose Estonians really like Volvo cars. The ties between our countries are even tighter when we consider the financial sector. The two Swedish banks, Swedbank and SEB, have about 2/3 of a market share in Estonia in terms of deposits and just a bit less in terms of total bank lending. But the Swedish presence in the Estonian banking market accounts for less than half of the total direct investment in Estonia from Swedish investors. During difficult times for Estonian and for the Estonian economy, our exports to Sweden and other Nordic countries have often been the bright spot. That was the case most recently after the COVID pandemic, when strong demand for Estonian exports from the Nordics was one of the main factors supporting our relatively quick recovery. Things perhaps look somewhat different now, as both the Estonian and Swedish economies are going through a period of relative weakness. But how should we think about the Swedish economic situation and outlook, and what could it mean for us in Estonia? We're lucky to have here today the best qualified person, I believe, from whom to ask about this and other issues related to the Swedish economy and financial sector. It is my pleasure to welcome here at Eesti Pank Mr. Erik Thedéen, the governor of the Sveriges Riksbank. By way of a short introduction, before assuming his current role as the governor in the beginning of last year, Erik Thedéen served as the Director General of the Swedish Financial Supervisory Authority for 7 years. He has previously also held the roles of the Chief Executive of KPA Pension and Nasdaq OMX Sweden, as well as that of the State Secretary at the Swedish Ministry of Finance. I have had the pleasure of working closely with Erik in different cooperation formats that we have for central bankers and heads of supervision in the Nordic-Baltic region, in Europe more broadly, and also at the IMF, where we are in the same constituency with the Nordic and Baltic countries. So I'm very glad that you, Erik, were willing to come to Tallinn today and share your views, and the floor is yours.
So thank you very much. First, President Kersti Kaljulaid and Governor, ladies and gentlemen, thank you for having me here. It's an honor, and it was natural for me to say yes to the invitation because of the close links, and actually, as alluded by the governor, the links when it comes to the financial side is extremely strong. Sometimes you might argue they are too strong, because if something happens in the Estonian banking system, it will affect the Swedish banking system and vice versa. We've seen that a couple of times. But of course, the only way to handle that is to increase the cooperations on various levels, and that we have done in various ways in the previous years. Let me also start with that Tallinn, I think I visited 3 times, which is too few. Because it's actually the capital closest to the Swedish capital, Stockholm. So it's easy to go here, and more Swedes should go here. I think it's a beautiful city. We had a morning run, me and the governor, in the icy Tallinn this morning, and it's beautiful. And we didn't slip, which was the big worry of some of the staff of SD Bank. Of course, our economic ties have deepened in recent years, in particular, of course, after the independence and the collapse of the Soviet Union, even more when Estonia joined the European Union. And of course, you adopted the euro. That's a little bit of a discussion in Sweden. I might come back to that later on. And as mentioned, we have this Nordic-Baltic constituency in the IMF, and we also work together in what we call the Nordic-Baltic Macro-Prudential Forum, which is an informal forum between central banks and supervisors, where we discuss various issues of joint interest. And I think going here, me and my colleague were discussing and say, when I started in various positions, it was very much Nordic discussion or European discussion. Now it's very much more a Nordic-Baltic discussion and a European discussion. I think that's a really good thing. I think that we should continue on various roles in various positions in various parts of the society. I think this is coming true more and more. So for sure, very, very close links with your country. So let me go in a little bit to talk about the policy setting. We had a monetary policy meeting last week. And this is kind of where we stand. The red is excluding energy, inflation excluding energy, and you see the little bit dot there says where we are now. That's 5.3%. That's higher than 2% target for sure. If you look with including energy, you see that the numbers are lower. So the story is that the sharpest drop in inflation has actually been due to base effect, high energy prices a year ago, much lower now, basically bringing down the 12-month rate. If you look on, which we do in the report, on 3-month, 6-month readings and kind of annualize them, you see that the momentum on inflation is going in the right direction. And that was one reason why we said in the meeting that we don't exclude the possibility that we will lower rates the first half year of this year. And this was a fairly big turnaround, because in the November meeting we basically said that our best forecast was that we would keep rates at 4% or slightly above 4% during the course of 24 and then lower it gradually in 25. But now, as inflation momentum is better, economic activity is coming down, which makes it harder for corporates to raise prices. Also, the labor market and other indicators of the economy is cooling off. We think that the inflation kind of momentum is going in the right direction. However, we are pointing at the risks. One risk being the geopolitical situation, which is extremely kind of present here in Tallinn when I talk to people. And you know that story, what would happen, the continuing war in Ukraine, that could of course affect supply chains and energy prices, we know that. But then we of course have the tragic development in the Middle East as well. So risks are still there. We are still on hold. We're pointing for a possibility to low rates. We're not there yet. And you see then the policy rates for different countries, and I sometimes get the question, why should you have your own currency, your own monetary policy, as basically just following the ECB? And as this picture shows, yes, we are very close to the ECB, but you could argue that all countries are following each other because we're basically in the same inflation cycle. So make that argument clear. I sometimes say, well, we also follow New Zealand because they are also hiking rates. This is a global inflation that we were all faced with. And we will see now when rates eventually are lowered, whether the pace are synchronized in the lowering of rates or if it maybe vary a little bit more. That is still to be seen. Yes, we are living in turbulent times. So basically, when I try to describe the inflation that we got, we have this internal and probably same debate you might have in Estonia, that why do you fight inflation? This was only supply driven. Actually, when we looked on the inflation numbers after half year, 1 year, all parts of the CPI basket were actually higher than 2% and actually substantially higher than 2%. And that, I am sure, is true also of Estonia, because actually your inflation topped at, I think, ish 20%, our topped at ish 10%. This is a broad-based, but it was, of course, the shock came from outside. And I see one sentence there is the fast recovery over COVID, and I think that's sometimes underestimated. So we all know that we have the energy crisis, and that was an inflation kind of impetus. But we also had a very unusual kind of ending of the let's say recession following the pandemic. That was not a gradual kind of upturn. That was immediate upturn. Once the pandemic was ended, everything opened, right? And I can't find any, maybe an end of a war or something, but it's very, very hard to find similar kind of business cycle to the business cycle kind of caused by the pandemic. And that also created a demand-driven inflation. And if you look on the metric fun inflation is basically traveling, restaurants, hotel, things, concerts, things you do for fun, right? That indicator actually goes up substantially more than other parts of the CPI baskets, and that tells you a little bit the COVID story. Things you couldn't do during the COVID, you were very eager to do once COVID ended. Of course, Ukraine, I talked about that, and the Israel-Hamas tragedy. We'll see what happens with that, but that's for sure a risk to the inflation outlook. When I look on the numbers and try to compare a little bit Sweden and Estonia, actually the downturn in COVID was similar. And I think both Estonia and Sweden was better off than the euro area, right? So the down was not as bad. Then the upturn was similar, fairly good upturn after the COVID was ended. But then, as shown in this picture, you have had a weaker economy than we have had. And then if you read the Swedish newspapers, which is, I think, in this sense true, actually the Swedish economy has been performing worse than many other European countries. So, of course, you are even worse than that in Estonia. And I guess I will get some questions, but partly that could be then the links to the weak kind of Scandinavian countries. And there you see also the inflation outlook. So coming to the housing market, and this picture I think is relevant also for then the Estonian economy. So the left-hand chart of this shows the construction start, and this I would say is near of a collapse of housing starts in Sweden. So basically we're going from a historically fairly high number of housing starts in Sweden to a more or less a collapse. So what's the reasoning behind that? So, well, basically this is interest rate sensitive business, right? So I will take this down to a very concrete level. If me or my kids were to buy a newly constructed condominium in the surroundings of Stockholm, they need to book that and say, yes, I want to build this. I see, nice kind of photos on how it would look like. So I book it. After a while, I put in some part of the very small fraction of the total price as a booking ticket. And then I'm basically have signed a contract, but I don't need to have kind of the full payment until I move in, of course. So the risk I'm taking as a private individual here is, of course, that what happens with the price of that, or the general price level in that 1-2 year period. So I'm basically taking a price risk here. I'm booking something at 2 million Swedish, but what happens if prices are down 20%? Then I will have lost a lot of money. So that kind of price risk is acceptable for individuals to take when the sense is, right or wrong, but the sense is that prices are going up or at least are being stable. If the sense is that there's a big risk that it's going down or even actually are going down, that business model is very, very hard to convince people to actually buy. The other reason is that, of course, newly built houses are, to begin with in this kind of condominium structure that we have in Sweden, they're indebted themselves. So you basically are partly indebted with your neighbors. And of course, that indebtedness is also a risk when interest rates are high. So that business model, you might like it, you might not like it, but it's not an attractive kind of offering to households, i.e. they don't buy condominiums, and therefore they don't build condominiums. So it's very kind of interest rate driven. And the same is, of course, for smaller houses that, you know, the interest sensitiveness is the big thing here. And then it's a little bit unclear to me why we are so much more cyclical than many other countries. So we have this boom-bust kind of structure of construction for housing in Sweden, much more so than, let's say, Germany. And I think this is something that we have to look into more. But we have also supply constraints in Sweden that are kind of more complicated than there are in Sweden. That depends on various legal obstacles, I would say, when you build. The right-hand side shows the housing prices and the overall housing constructing investment. Of course, there is a correlation there, and house prices, I would argue, has not gone down that much that you would anticipate. So if one would have asked me 3 years ago, okay, let's say mortgage rates are going up from 1% to almost 5% in 1.5 years' time, and households, I will show that, are highly indebted, what do you think? I would argue, well, this is dangerous. This could be really, really bad for housing prices and, for that matter, then for the general economy. The end game, question mark whether this is the end game, but let's say this is the end game, they fell 13% from top to bottom, and now they are kind of leveling off, and we'll see what's happening. So I think the fall in prices have been fairly mild, but the number of transactions have gone down significantly. So basically, people are sitting still in their flats and their homes and say, I'm not selling in this downturn, I'm just waiting. So transactions is down 20 or 30%, although I think that the latest indications are that they're coming up a little bit. So the Swedish economy is down a couple of percent, 0.3, 0.4, 0.5, 0.6. We haven't got the final number for 23 yet. And housing construction is falling dramatically. So if you take out that, assume that housing construction was 0, then we would actually have a plus GDP growth in Sweden. So the economy is the downturn is heavily driven by the interest and sensitive sectors. So housing construction and retail sales, especially durables. You can see that in car sales, for example. If you look on investments excluding housing construction, it's actually going up. If you look on the industrial sector in general, it's fairly okay. If you look on the employment, it's been record high last year. It is now cooling off a little bit. So the overall economy in the kind of average number is weak, and it's going to continue to be fairly weak this year and then turn up again in 25 according to our forecast. But it's very kind of different in different parts of the economy. So we don't have the euro. We have the Swedish krona. And this is the Swedish krona lately on the last 10 years, a little bit more. And this is a trade-weighted basket. So basically when it goes down, it's strengthening. When it goes up, it weakens. And we have been in a weakening trend, and that weakening was actually accelerated for the last 2 or 3 years, as you can see in this map, although we have a little bit kind of bump back and stronger krona late last year. And this was we don't have a target for the krona, of course. We don't have a fixed exchange rate. So this is a variable rate, and we take this into account when calculating inflation and inflation risks. And what we have found out in various research is basically that we published that we thought that the pass-through from a weak krona through imports into inflation was fairly weak. So there is some pass-through, but you should not kind of overplay it. It seems that it might be, in this inflationary environment, might be higher. So we are concerned about the weakness of the krona from that perspective. And we think that if you look, for example, on goods prices, they have been on the higher side compared to other European countries, probably because of the weak krona. So why is the krona weak? And as I have on the fourth dot here, new explanations. If you look on a traditional economist kind of view on krona, you said current account surplus, trade balances, that kind of discussion, you end up in it. If you have positive, you should have a little bit strengthening krona. But if you look on the volumes of krona transactions in the foreign exchange markets, it's increased dramatically the last 10, 20 years. And basically the bulk of it is financial flows. And it's done in London. So, and we don't have a clear picture what's driving this, but for sure in short, medium term, it could be totally off the kind of traditional theoretical models when it comes to purchasing power and real exchange rates and notions like that we typically see in the textbooks. For example, Swedes have a lot of foreign holdings in their savings and pension saves. So they are, you could argue they are advanced. They don't only save in kind of Swedish companies or Swedish bonds. They actually, through mutual funds, save a lot in international equities and international bonds. That's probably wise, given diversification and all that. But that, of course, is a weakening of the krona. They are basically selling krona from their salary and buying equities, right? Then you hope that somebody would do the other way around. But being a fairly small currency, you could argue that maybe the outflow is bigger than the inflow. So a French pensioner or pension saver might do the same, probably to a lesser extent, but maybe exclude Sweden because we are so small. So there might be a kind of a negative krona effect from capital flows. You would argue that if it's weak enough, in the end it will be some kind of arbitrage actually buying krona because it's too weak, right? And I sometimes asking whether we could be sure that the krona is undervalued, which we claim. I say that if every neighbor around the Baltic Sea and the Nordics go to Sweden, to IKEA to buy furniture, it's probably undervalued. And actually the Finns do, the Norwegians do, and the Danes do. I don't know about the Estonians, but it's become much cheaper to go to. So welcome to Stockholm, by the way, if you want to be on vacation, because that would strengthen the krona and limit the inflation risk for the central bank. So you will do a good thing. It's already talked about the geopolitical. I will talk a little about the indebtedness. So basically, Sweden is, you could argue, the opposite of Italy. So Italy has a lot of government debt. We all know that. There are actually very, very little indebtedness in the private sector. Sweden is totally different. We are, as Estonia, extremely low public debt. General public debt is 30%-ish, so low. I guess in the Nordic setting, it's only Norway that is better, but Norway is a special case, right? Yeah, but I said Nordic. I know that Estonia is low. So Nordic Baltic, yes. Then I know that Estonia is really good, off, maybe even better. So the public debt is low, but the indebtedness in the household sector and also in the commercial real estate sector is high. So you can say that the low interest rate was not used by the government, but for sure it was used by private individuals and corporates. So when I compare the numbers, Estonia also have variable rates to a large extent. I think even actually a little bit more than we, if possible, because I think we have 80, maybe you have 90. But indebtedness in relation to disposable income or to GDP is about double in Sweden compared to Estonia. So we are much more indebted in Sweden as households. But before I talk a little bit more about that, because I have some slides on that as well, I will say a few words about banking profits. This is topical, I think, in Estonia. It's topical in Sweden. It's topical, I know, in many other Baltic. It's actually topical in all countries, for sure, in Europe. And there's been some tax initiatives in Italy, for example, regulation, I think, in Lithuania. And for sure, there's also been that discussion in Sweden. So this basically says that this is ROE, so the return on equity, but basically you see it's a fairly okay. Typically, Nordic banks are better than European or the euro-based banks, and you see a big upturn. And of course, you know the reason. This is because basically lending rates are going up, deposit rates are lagging, and the net interest income is going up sharply. So this is what you know from history, is that eventually deposit rate will catch up. So you could say this will not go on forever. But of course, it raises some questions. What I've said, we had a hearing in the parliament the day before, or was it yesterday? Time flies. I think it was yesterday morning. And then I said, well, profitable banks is much better for stability reasons than non-profitable banks. That we know. But we as a stability authority, together with the Swedish FSA and others, we have not asked for additional profits for stability reasons. That might be good for shareholders, it might be good for the banks, but don't say that we need this for stability reasons. That I've never said, and I think it's hard to argue for that. We need, in general, profitable banks, but these kind of profits is up to them to defend of other reasons, I think, not stability reasons. Or just accept them. And it's a political discussion, and I will not go into that, but just to make that clear. What I also said, that, and I will not go into the tax issue, is that if, as a private individual, for sure in Sweden, I'm sure the same goes in Estonia, as you're also very digitalized, it's very easy to shift savings accounts if you're not pleased with the one you have, right? So instead of maybe complaining too much, just switch, because that will be a strong signal for the banks that are lagging that they actually need to change the deposit rates. Again, profitable banks are good for stability, and this shows that they for sure are profitable. And so far, which is also important for stability, the kind of credit losses are extremely low, even in for commercial real estate. So back to indebtedness. This is actually my favorite, and I spent so many times looking on this picture for the last 8 years, so, but it's still fascinating. So I will say a few words about it. So the red line is then the indebtedness in household sector to disposable income. The bulk of this is mortgages. So you see that this is hit almost 200% and coming down a little bit. So this is one of the highest in Europe. I think Denmark are slightly higher, maybe Netherlands, but for sure it's very, very high. It's also a difference between households. Again, this is an average. So some households have substantially more than this, of course, and some households have typically substantially less. And it's a generational thing. So think of what happens if house prices go up in a society. Let's say 10%. I would argue very little happens to the economic activity, the growth kind of prospectus for the countries. I don't think much happen. But I get rich and my kids get poor. Because I am a house owner, they are not, well, they have some, but they're more indebted. So basically, it's a switch in generations where house prices go up. And exactly that's what we see here. Indebtedness have been increasing, but of course, house prices have increased even more. So for a lot of Swedes, this is a good story. They have less indebtedness to the house value than they used to have 10 years ago. But of course, for my kids and that generation, it's the opposite. So it's a big kind of also political issue, I think, you know, and I always find these headlines in newspapers saying, we're back again because prices are increasing again. What back again? What increasing? Increasing prices is good for me because I have houses. For all the newcomers to the housing market, it's bad news. But of course, as we have so many house owners in Sweden, the kind of media political discussion about house prices is it's a good thing when they go up. I'm not saying that it's a good thing that they go down, but maybe a little bit more of the German kind of shape of these price curves would be better for stability. So that's the disposable income, and then you have the interest to income ratio. And I think that is fascinating because we're actually back on the same level, interest to income, as we were in 1995. So strong increase in the indebtedness, substantially lower interest rates, sent the interest rate to income lower and lower and lower. But now, of course, much higher because of the interest rate increase, and actually back to levels which I refer to because we had this 1990 crisis as fairly high or really high rates, right? But of course, the indebtedness at that time was substantially lower, as could seen in this picture. So we are extremely interest rate sensitive. The good story is that it seems like most households had a lot of cushion, actually, savings, and also I think the credit standards has been good. So they're managing this. They are of course reducing their consumption, but they are actually coping. They are not going into bankruptcy. tiny part of households are, of course, but very, very limited. So this is, and we have been warning about, this is mainly a macroeconomic problem. And of course, a problem for the individuals, but it hurts consumption, it hurts the economic activity. And it is an issue that we discuss a lot in Sweden, that we are highly indebted. Another sector that is highly indebted is the commercial real estate sector. And this is actually my favorite graph. The other one was also a favorite, so I have two favorites. I need to change profession because maybe it's not so interesting for all in this audience, but I think it's interesting because it says that this is the indebtedness to cash flow in commercial real estate companies. So for every cash flow, every krona they earn, they are more and more and more indebted. The quote went from 11 to topped at 18. Now it's coming down because they're actually reshaping their balance sheet. They are selling property. They are bringing down the debt. They are bringing more capital. And we have said from the central bank, this need to go on because, of course, some of these companies are coping to even cover their interest rate payments. So this is a sector that is it's a commercial real estate that is very commercialized. It's in enterprises, it's highly indebted, some of the companies are on the stock exchange, and for sure some of them are in pretty bad shape. Also, the indebtedness were through the banks. So the banks, if you take away the financial lending to you only take the non-financial lending, it's 50% of their lending is to the CRE companies. Some of the CRE companies are really strong. Some are really weak. Again, this is an average. But of course, weak companies, there could be a contagion effect, so that could spread. Also, not only did they borrow from the banks, they also borrowed heavily from the bond market. So the bond market increased from 100 billion Swedish, 10 billion euro-ish, to 700 billion in like 10 years' time. So the bond market bought the bonds from these fairly indebted CRE companies because everything looked fine, right? And then, of course, now it's much more difficult to issue bonds, especially for the weaker companies. Credit spreads have increased. So even if our policy rates are at these levels or potentially eventually lower, there might be that the risk premiums are so high, so it's going to be very, very hard for them to finance on reasonable interest rates. This is, of course, a worry that also have had some international interest. So when I talk to European colleagues or even US colleagues, they don't know that much about Sweden, but typically are something about the CRE sector because this has made some headlines also in the international media. I'm coming to an end. Just wanted to show this map and just underline that, of course, the uncertainty is great. Some argue greater. My wife is an archaeologist. And when I say that it's more uncertain than ever or our technological advances are better than ever, she said, how do you know that? And I think she has a point. It's always easy to say that everything is much more uncertain now. When we had the Cold War, we had the Cuba crisis, and a lot of Second World War, a lot of uncertainty, right, in the world. So it's not only now it's uncertain. But I will point out that for sure in the now and maybe the last 10 years, the geopolitical situation is very, very severe. And also, of course, climate change. Climate change is something that we actually, I think, know for certain will create more supply shocks and will increase uncertainty because of basically reasons we all know. The economic integration and close economic ties will increase, I hope, in this region, and that I think brings more cooperation. They're going to be important. We are extremely financially integrated. We might like it or not like it, but we need to handle that, and I think we do that by cooperating not only between central banks, but on all different levels, and I'm sure that that's exactly what's happening between Sweden and Estonia. Thank you.
Thank you very much, Erik. Now we still have some 20 plus minutes for a little bit of a discussion and questions and answers. So I hope you can see us also when we sit down. There are some microphones moving around so that all of you can ask questions. Please introduce yourself as you do that. Maybe to kick off, let me just ask a follow-up to your presentation, because I think you gave an excellent overview of where the Swedish economy is right now, and the financial sector and the risks that you're facing. You perhaps elaborated less on the outlook as you see it going forward. This certainly is of interest to us, given the importance of the Swedish export market and the housing sector in particular, given the links that we have there with our exporters. So maybe you can still say something on that.
For sure. So basically what we're saying, we think that also 24 is going to be fairly weak. We still have limited size or no signs that actually the construction sector, for example, the housing construction is going up. I think households are still having a fairly gloomy thinking of their own economy. You see that in surveys, so consumer confidence is very low. There's some small uptick, but still very real. I think what we say is that's going to be a sharper uptick in 25. Then real income will actually start to grow. Inflation is coming down. Nominal wages is actually well behaved in Sweden from an inflation perspective, but that's been a real income cut for wage earners in Sweden. That will change if and when we succeed with the inflation target. So as inflation comes down, nominal wages is around 3.5–4%, then real wages will grow, consumption will start to grow again. So we have a fairly optimistic view on where we are in 2025.
Okay, and you still need more housing in Sweden in the future, so that's
for sure. I think we have there's various how you calculate it, and I think it's very, very difficult to say exactly how much you need, because that also depends on preferences for how large house do you want to have, how expensive is it, and so on. But due to a lot of immigration, fairly okay fertility, we for sure have an undersupply historically of housing. So I think there is an underlying strong demand for housing in Sweden. But then, of course, people need to feel some confidence that they actually could afford it and it could cope with interest rates, and price levels are not going down and so on.
Yes. I'm already looking if there are any immediate questions. I could keep going. I can see there's a question there. Please. Igor Taro, a member of the parliament.
I'm the head of the environmental committee, and I have a question about the environmental politics and the links between the environmental politics in European Union and the future of economy. How do you see it? Because we have very ambitious goals linked with the climate change issues, and very ambitious goals of the European Commission with a renovation policy. So how would it affect the housing policy and the building construction topic in Sweden?
Oh wow, that's a broad question. I think I will take the question more to discuss how it will affect stability and economic growth. And I think there is, of course, a big transition need to happen in the economy, in all economies, right? So there will be a lot of winners and there will also be losers. So that in itself is, I think, to some extent, a stability risk, in the sense that we don't know exactly the winners and losers. And I take my banking hat or banking kind of stability hat on. I think that creates some tensions, maybe not foremost in Sweden and the Baltics, but for sure more generally speaking. We see the climate, maybe this is naive, but I'm just being honest here. As we do forecast on maybe 1, 2, 3 years ahead, we don't say that, okay, these climate policy will lead to that GDP and another climate policy will lead to that. What we say is that this might be a risk for the economic growth long term, and it might be a stability risk medium term, and that we try to handle. So I think medium term, I think my forecast still holds, but of course if more drastic shifts will come from the climate policies, I wouldn't exclude that the shifts might be more dramatic. And if you look on the Swedish case, experts are talking about a dramatic increase in the need of electricity, because actually, to a large extent, of the green transition, where we should do steel without coal and all other parts of the industry that need to be kind of green. And where should we get that energy from? And that's, of course, a big discussion, even in a country which is, to start with, have a very, very low carbon footprint when it comes to energy production, as we basically have nuclear, hydro, and wind. By historical reasons, and geographical reasons, we have that. So the energy transition, I would argue, without being an expert, and again, it's important also for economy, is less than it would be in countries that are heavily exposed to fossil heating or fossil energy production, which I think to some extent is true for Estonia, but for sure is true in Germany and Poland and other countries. Sorry for not having this link to building, because I thought that was kind of a little bit difficult.
I see there's a question from Leno, the fourth row.
Hello, thank you so much for your talk, Leno Uskila, Luminor Bank. Estonia is now discussing how to get rich. Sweden is rich. What is the secret? Second, you said supply shocks with the climate will be a major challenge. Monetary policy with a demand side policy. How does it handle? What needs to be done different in the future?
So I start with the second question. I actually had a speech about this in the end of last year, and this is extremely topical in central bank kind of circles now, as you probably are well aware. I think the textbook response to supply shock, sometimes take this extremely simplistic example. If you know that kind of gas prices are going up one week and going down the other week, so we have an inflation input from gas prices, for sure no one will say that the central bank need to hike interest rates, although CPI might be off the 2% target for 1 or 2 months, right? So that's look-through argument. Supply shocks, they come and go, you just look through them. I think that was, and we evaluated monetary policy in Sweden in 2022. And one of the findings there, also our finding, but also external people found that we thought that the spike in energy prices in the beginning of 22, end of 21, was only a supply shock. So when we had the interest setting meeting, and that was before I came in February 22, the argument was, well, inflation is going up, but we will look through it, we will not change our interest rate path. Eventually, that turned out to be a mistake. And we all know what happened afterwards. So I think on your question on supply side, I think when reading and when talking about that, when it comes to the environment, the risk is that we get multiple supply shocks, not the spike in gas prices and nothing else happens, but it's multiple. If it's a fire in Chile, or if it's a kind of water catastrophe in France, or if it's something else, and that could add to an inflation environment that would need a central bank to actually anchor the inflation target at 2%. And I think that's the kind of general reasoning around supply shocks that we learned, but also something that is more relevant now with the climate. What I think, and I said that in the speech, what's complicating the supply shock in February, in our case February 22, it happened a little bit earlier, is that there was a supply shock together with an end of COVID. And that is probably not happening every year, right? So that's pretty unique. So I think you need to take that into account also when thinking about supply shocks. How to get rich? Well, I'm not sure that I'm the best person to. But actually, I saw in one of my briefings going here that in 1940, the average kind of living standard was the same in Estonia and in Sweden. And that, I think, tells a story. And I have sometimes talk with my family, and others say that Sweden are living on, from forest and from iron and Well, I think we are living from an educated people, a good legal system, and a good democracy. I think that is the key things to become ready. If you keep that and develop that, eventually you will prosper. If you have a lot of oil, well, it's not always a good thing, right? There are some neighboring countries that have done it really well, but there are some other examples that actually oil could also be really bad for your growth and for your democracy, what have you. So I think education, democracy, and the rule of law. That would be my general thinking. But you know, I'm not a researcher in this. But don't overstate kind of the natural resources and all that. That, you know, Japan is a good example. I don't think they have more or less any natural resource. They're pretty rich. And in that sense, I guess you're on the right track, right? You're a democracy, rule of law, and you're a part of Europe. So I guess. Maybe not in 2030, but maybe in 2040 you will be as rich as we are.
Yes, and you have to make sure not to get occupied. That's the trick.
That goes without saying.
Yes,
yeah. And that's why we are going into NATO, by the way. Yeah.
Yeah. As you think of your questions, maybe I can meanwhile ask about the Swedish krona and the exchange rate, because you explained how the pass-through from the weak krona is a problem from the inflation perspective. Now, from our point of view, the weak krona has been sort of another problem on top of the otherwise weak, relatively speaking, economy in Sweden and the construction sector in particular, as our exporters get the revenues in krona. And then one might think that it also helps the economy to recover as your currency gets weaker. So perhaps you can elaborate on how do you see the both sides of that, and how that enters into your discussions when you set the policy. And maybe on top of that, is there any debate in Sweden also about Sweden eventually joining the euro area, or not really?
So on the first, this is this beg thy neighbor kind of discussion. Are we actually gaining from our exports and you are losing because the krona is weak? I think, you know, to some extent that's probably true, and as I said, that our exports and our industry is doing pretty fine. What is true also is that no one is actually calling for a weak krona. It's not like we have business delegations going to the central bank or to the ministry saying we want a weak krona. Actually, it's been a little bit the other way around. Some people from the business sector have said we want a stronger krona, because export sectors and business in general, in Sweden, I guess that's true also of Estonia, they are so integrated, they're both importing and exporting, and so there's not only this kind of textbook the iron companies might be one example, just take iron from the earth and then sell it, and then of course the value of the dollar is extremely important. But most companies are much more complex, so it's not kind of clear to everyone whether they gain or lose from a weak krona. And that, I think, I created a more general debate in Sweden that the best thing would be a stable krona. And many business people agree with the central bank that the krona should be stronger, even if they are exporters. So maybe that's comforting from an Estonian point of view. There is no opinion in Sweden that we should weaken the krona to gain market shares. Rather, I would argue the opposite. Then about the euro, this is not a question for the central bank. It's the parliament that decides our exchange rate regime. I could just say a few words about kind of the debate where we were, and I see some tendencies. When we decided to stay, that was actually after a referendum, but the discussion was a little bit like this, that from pure economic reasoning, it might be wise to stay out. Because if we are hit by either economic kind of Swedish crisis, we might have the krona as a cushion. Basically, the argument that you use it weakens, and that could help the industry. Also, we have the independent monetary policy. So if we have extremely high inflation in Italy, we could still have lower rates because we don't have a high inflation. So that's that kind of argument. But I think the discussion was purely economic, probably wise to stay out. If you bring in the politics to it, it depends on your preferences and what you think, but of course your power into the EU Euro system will increase if you part. You know that, because I had a dinner with Madis yesterday, and I asked him how it worked in the ECB system, because here is Estonia as the big brother, so we are actually asking what's happening there because we don't know. And then of course that has something to do also with influence. You as a country and other countries come closer to the kind of power circles in Europe. And how you should balance these arguments eventually is a political discussion. The political discussion so far has been limited, and I have also expressed it officially. I think it's been kind of one-sided. It's like if the krona goes weak, we should join. If the krona goes stronger, we should probably stay out. And I think the debate should be much more sophisticated. It's about economic arguments. That could be the krona volatility, but it's also political. And again, that's outside the scope of the central bank.
Okay. I have at least, I can see 3 additional questions, or 4 already, but President Kaljulaid first and then Urmas.
Should have the mic, I think.
Basically, you mentioned that there is demand for stable krona, and looking also at your trade relations, that would mean euro, wouldn't it? I mean, that's the biggest stability you can get actually. So
if you look on,
if I look where Sweden exports,
for sure,
that your trade partners, so
75%.
euro. I mean, if you already say that stability is something which people demand, then I would say euro is what you need. Yes, but you may want to comment on that. But my question actually relates to this predictability and unpredictability of economic environment, and we have some of our own issues here in Estonia right now discussing it. But also thinking of this structural shift in our energy production, there is quite a lot of unpredictability and bad visibility in what should we do. And we have a discussion in Estonia which says we might overinvest and go too quickly in the structural energy mix change because there is this unpredictability. And you said Sweden is a far less carbonized economy than we are, yet you must have some part of that discussion as well. Is there a risk to overinvest into green energy production, which is a debate here in this country? Thinking also of that we need to export towards you and you need clean production, then of course you might say no, but try to take a little bit more neutral and kind of analytical position, if you may. Thank you.
So whether it's a no-brainer to go into the euro, again, it's a parliamentary political discussion. And more seriously, it is a political discussion. And of course, you, Madam President, knows that there are some people that think more of European integration is fantastic, and there are some politicians that don't think it's fantastic. So therefore, the totally natural yes that you express is not the total natural yes for everyone in the parliament, and I think I stay there because again my personal view I keep for myself. And on the energy, well, this is a little bit out of scope of my knowledge, but generally speaking, I think the discussion in Sweden, if I refer to that, is that we need so much more energy and grid to handle the energy, that we probably need to invest in all green, and then there is some debate whether nuclear is green, but let's say that I think that some majority that for sure that's a possibility to also include nuclear. Then I think the discussion would be that the risk of over investing is fairly limited. Having said that, for sure, sometimes I think there's been a naive discussion that all green investments in general are risk-free. And we now see some small headlines in newspapers of green car makers or green truck makers or green whatever actually going belly up. And that's natural because not all of these companies will survive in this kind of hype, right? And I think that's and of course, in that, you should also add that there will be a political risk here. And to take one example, the nuclear discussion that we have now currently in Sweden will involve one way or the other some kind of state intervention, if it's guarantee, if it's subsidies, whatever. And of course, that kind of political intervention comes with, business risk as well. Will the investor actually trust that these kind of regulations, subsidies, guarantees, whatever, will they last, or will they withdraw it if Parliament shifts? that is, I think, a major discussion, as we have currently now on nuclear, because I think everyone agrees that to have it totally market-based seems to be hard, because we have not built anything for 40 years or whatever.
Urmas, please.
Urmas Varblane, University of Tartu. And I come to your favorite slides about debt. And I have observed many years already how Sweden has kept the public debt between 35 to 40%. And I have a very simple question: how you have succeeded to manage it so long on that level? And considering all kind of governments and different opinions.
So I will answer that question, and I also take you, brief you a little bit on the discussion we have. Well, but we might, a little bit change the framework. But basically, we have a framework which is kind of agreed on in Parliament. We have over the business cycle a 0.3 surplus, and then we have a kind of a limit for the government debt, and that's widely accepted. More importantly, it's not only accepted in the Parliament; it's widely accepted by the Swedish population. And the reason being, I can't find any other reason anyway, is that the trauma that Sweden went through in the 1990 crisis is still in the head, for sure in my head. I'm not sure about my kids, okay? So it depends a little bit on generation, but so far it held that indebtedness on the government side might lead to a catastrophe. And therefore, actually in the election campaigns, they are fighting each other who is most prudent, which I think is not really what you see in some other countries, right? So that has been, I think, the answer to your question. Now we have a debate whether are we too prudent. Maybe we are actually underinvesting in green transition, defense, other things, infrastructure, railways, and maybe we should increase the kind of ongoing budget. Now we have a surplus, maybe we should have a balance. Maybe some are saying we should have, over the business cycle, a slight minus 0.5. Still have an anchor for the debt, but maybe slightly higher. And the reason being that then we could allow for more investments. And there is actually a parliamentary kind of inquiry going on as we speak on this. And they will present, I think in a year's time or something, a proposal. So maybe loosen it a little bit. But I don't think it's an appetite to kind of let go of it. And let's and we see, Finland is a good example, neighbor to us. They have substantially higher indebtedness. And as I read the Finnish kind of discussion there, that's a big discussion, how to bring it down. So I think it's a large acceptance that we should not go there. One reason being the financial sector. Because what happens in the 1990s was a collapse of the banking system, a rescue plan not only for banks, but for the whole economy, supporting that through automatic stabilizers, but also active fiscal policy, and that made the deficit. At the time, we had 12% deficit to GDP. That's pretty high, right? So also to be prepared to pay out if and when we have a severe crisis again. Geopolitical, financial, whatever.
I guess there's a lesson also for other countries and Estonia as well in terms of the importance of buffers and the ability to maneuver in a crisis.
Yes.
Because in the 90s, your debt level was also not that high in the current European sort of context.
We were really, this is an extreme level. I think we ended at 82%. That would be below the European average now.
Yes.
And that was a catastrophe, seen as a catastrophe. You should though say that we had interest rate at 12% at that time, so it was a little bit tougher. But
right. I think we have time for maybe one or two more questions. I think, Taavi, you had one.
Thank you very much, Taavi Rõivas, tech entrepreneur. Thank you very much for this very valuable insight. I would like to continue this deficit discussion just by mentioning that unfortunately or fortunately, it's not always linked if your budget is in deficit that then the investments are higher, so it can be just spent as well. So there is a lot of examples throughout Europe about that. And the prudence of Sweden has been, of course, remarkable. And and really to be respected. But my question is something that is kind of an elephant in the room. You touched it by mentioning energy prices, you touched it by saying about the supply problems, and this is obviously the war, ongoing war in our neighborhood. And I would like to ask from a little bit another angle. We see that the political discourse in Sweden has changed dramatically over the last years. Public opinion has changed dramatically over the last years. But my question is about the debate or discussion that is involving also Estonia, or where we see like different opinions among Estonians. And this is, how do investors see, both foreign investors, domestic investors, do they see that Sweden is in immediate neighborhood of Russia and thus under immediate threat? Or do they see that you are behind the almighty back of Finland and their rifles? Thank you.
So I think there's an ongoing discussion. First, on the deficit, I totally agree with you that the kind of, if you say you want to increase indebtedness, you need good investments. The important thing is actually to bring those investments rather than more general spending. And that, I think, is a discussion we will have in this parliamentary discussion. You know, how do you safeguard that the extra spending that you actually relieve is going into things that you think long-term is good? And that, of course, that will be a political decision. You know, there will be different opinions on what is long-term good investments if you're from different political parties. On the Russian aggression, and of course the war is extremely present also in Sweden, and many of you, I guess, follow some of the discussion in Sweden, but this changeover from neutrality to NATO that happened a year ago is for, and I take that from a personal, this is not the governor speaking, but you know, this is a totally extreme changeover. So it should not be underestimated how hard hit the Swedish kind of general debate and the security situation was changed when this war happened. And I think that's, and hopefully now we will join NATO in a couple of weeks' time. So far, I don't think we hear or see in the data that investments are going down because of our close kind of geographical kind of to Russia. I think there might be anecdotal discussions or evidence, but it's not a pronounced discussion, and I think still we have a very active kind of business sector, heavily internationalized. So no, I don't think we have that yet, but there might be some bits and pieces, but you definitely don't see it in the general data, so to say.
I actually can see more hands, but I think we should end with one last question from the front row. The gentleman, please.
Hello, Arko Gutman from Pank. I'm a board member there. From your presentation, I picked up that 2024 the Swedish economy will be fairly weak, and as I understood that 2025 it will start picking up. I'm working on the corporate side, meaning that on a daily basis we see Estonian companies who are exporting to Sweden. So my question is simple: that what would be your message to these companies? What we can give to them when we have these meetings? Should they be like fairly comfortable that 2024 it's still a little, let's say, weak time, and then it starts picking up? Or what is the main message from your side to these exporting companies?
I will first say something that might sound as a joke, but I actually believe in it, is that if we get inflation down, the situation will brighten a lot, because the inflation has been the thing that brought down real incomes, brought up interest rates. So that's been a double hit for households, and eventually demand for housing comes from households, right? So that kind of mix seemed to be substantially better if our forecasts are right. They have been wrong before, but if they are right, I'm humble here because all central banks were wrong in 22 and part of 23. But if we are right and inflation comes down, eventually interest rate will come down, and that I think will, and then real incomes will go up, and that will change the kind of setting for the economy. So that I think gives reason for some optimism. But having said that, that's more than a year in the future, and there are also, of course, risks to that, and that's obvious. You know, it's go back what we see in the last 4, 5, 6 years, and then you realize that a lot of things could happen. But that's anyway our thinking, and we see some indicators also in the data that some of the tendency surveys are actually moving a little bit on the positive side. So it's not only a forecast; it's some indications actually.
On that happy note, thank you very much, Erik, and thank you all for the interest and your good questions.
Thank you.